What's up, everyone? Taiki here. Welcome to episode 26 of the Crypto Market Wizards podcast. This is the first time I'm doing it live because we had some good, big news today. Unichain, which no one really expected, just got announced, and I wanted to bring Dan on because he's been calling for the inevitability of Unichain for over 2 years. So when you saw this news this morning, how did you feel? Did you feel vindicated in your thesis?
Yeah, it was pretty cool to see. I mean, I try to look at where the puck is going and try to help understand what could happen. And this one was something that seemed obvious to me at the time, but clearly wasn't to a lot of people. And even Vitalik hopping in there and disagreeing. And it's not that the points weren't valid, but I think as I said, there were some things that made this feel pretty inevitable. And so it's exciting to see it happen. Not everything is as I predicted it would be, but I'm excited to see this big step happening.
Yeah, so we'll just focus this entire episode on Unichain and the implications on the Uni token, the ETH, the value growth, etc. But just for the part of the audience that don't know who you are, can you just give a brief intro of what you do and like you do now?
Sure. So I'm a co-founder of Nascent, which is a investing and trading firm. We do early stage VC. That's what I focus on, working with teams at the pre-seed and seed stage, doing anything in crypto. And then we also have a team that focuses a lot more on kind of liquid markets and trading. I know you've had my colleague Matt on this show before. He's fantastic, and yeah, so we're just deeply involved in DeFi and as many aspects of the crypto ecosystem as we can be. I got started in crypto about a little over a decade ago as a grad student at MIT, starting the MIT Bitcoin Club. Spent a brief internship at Circle back before they launched. Was on the team at IDEO Collab and co-founder of IDEO Collab Ventures. Helped get kind of YAM off the ground back in DeFi summer in 2020. So been around and big fan of Uniswap for a long time. It was the thing that got DeFi to click for me in the first place. And also I'm an early investor via Nascent and previously via IDEO Collab Ventures and Optimism. Superchain is a big part of this. And then with Nascent as part of Flashbots. And there's just a lot of awesome teams around this that I'm excited are contributing to the Unichain vision.
Yeah, no, I had Matt Klein on, I think, episode 3 of Crypto Market Wizards, I think.
Super
I like I like talking to him because he's a fellow mid-curve, so we can kind of relate on our mid-curve ideas. But let's talk about your theses-driven approach. So you posted this 2 years ago, September 29th of 2022. And like you said earlier, you saw this coming. A lot of people disagreed, even Vitalik. But can you just briefly go over what you saw at the time? And can you just go over why you thought that this was inevitable?
Yeah. So to be clear, I was not the person to come up with the appchain thesis. Like the Cosmos ecosystem in particular had been thinking about app chains for years. And also, I'll clarify, app chains was also talking about roll apps or application specific roll ups as well. I view them as largely being the same for the purposes of this conversation. But the core case was that there are 3 real costs when it comes to trading on Uniswap or any DEX. One is the swap fee that everyone thinks about, which in some ways actually isn't really a fee. It's more of a spread and it's going to LPs. Then there's the transaction fee for the blockchain that the DEX is on. And ultimately MEV is a significant cost as well. And I just did some pretty rudimentary analysis looking at this and saying people talk about the swap fees as being the fees for trading on DEXs, but actually the transaction fees and the MEV are much larger costs to DEX traders and end up resulting in worse price execution because you've got larger spreads. And the ultimate way to solve this was going to be through having an app chain or roll app. And that's not to say that we will stop seeing deployments of Uniswap on other chains. I'm pretty sure Uni v4, whenever it goes live, is not going to be limited to Unichain. But there's a lot of incentive if you want to create the fastest, lowest cost trading experience while still keeping it permissionless and decentralized in the most important ways. You're going to need a chain to do that.
Got it. And I guess going back to this post, if I can share the screen here. So, this is, yeah, like you said, you wrote this thread on Twitter/X, and then Vitalik actually responded to your tweet saying, I have a hard time believing this argument. Uniswap's main value proposition is that you can just go and get a trade done in 30 seconds without thinking about it. A Unichain or even a rollup makes no sense in that context. A copy of Uniswap on every rollup does. So what did you think Vitalik got wrong here? And yeah, like what are your thoughts on this?
Well, I mean, first of all, it's very rare that I would say like I think Vitalik is wrong, and I think
Right.
that his arguments are also quite valid, and I think where we have a difference in view on this was just looking at like what are the incentives, what are people going to optimize for. I spent an unfortunate number of years, I think, in like kind of Bitcoin maxi headspace, just like being like this, there's like one true path for decentralization, and this is how you have to do it. And I think that folks who are opposed or don't think that the Unichain approach makes sense or the application specific chain approach makes sense are trying to go with like a very purist vision, but in some ways they end up making a case very similar to the kind of like monolithic L1 versus like a modular approach. And Vitalik obviously is, very much in the modular camp overall in terms of his approach. And I think that we just don't need things to be fully atomic. There's this really, I would say, exciting convergence that we're seeing where people are not relying purely on economic security mechanisms and incentive and not relying purely on cryptographic security mechanisms and incentives, but they're kind of blending them together. And I think, he cited, we actually had an exchange kind of back and forth in that thread. And he pointed out that, yeah, in the future, we expect these ZK rollups and we'll be able to do all this atomically. And I think a big difference that he and I have in a view in terms of how this would shape up is a belief in how important the atomicity, the atomic transactions, how important those are going to be. And my view is like pure atomic transactions, atomic composability on blockchains is like amazing, but like we're living in, I don't know if it's like if we've been in like a special time where like that's largely possible with all these DeFi apps on a single like monolithic chain. But and maybe we'll get there with the ZK thing in the future where again, everything gets to be largely atomic. But I think that the vast majority of transactions on blockchains don't need full atomic composability. It's nice if you can get it, but it's not a requirement. And if you can get a lot of advantages in terms of speed and liquidity and ease of use in ways that make things break and are not fully atomic, that's okay. We've got market makers stepping. We've got like when you look at blockchains themselves, like right, the fact we have transactions on chains with public mempools, with the whole like now PBS stack. It's not as if everything is being done in this fully atomic way. There are some things that you're composing and doing that way, but a lot of the time you've got your transactions sitting out there and stuff is happening around it anyway. And so we already have these kind of market forces coming in, and it's not just this pure cryptographic thing where everything happens the instant like the initial intent was created in somebody's mind or on somebody's keyboard. And so since we're already in that world, it's fine to have slightly more delays, have market makers are stepping in and doing their thing here and getting the price as close as possible. Yeah, there are still some costs. on doing things across multiple chains and other things. But I think the ability to provide a cheap and fast, best-in-class solution for people who are fine doing stuff on this chain, that's the obvious way that if you want to compete with centralized exchanges, that's how you've got to do it.
Yeah,
At least have that as
and
like a piece of the puzzle, right?
right. And I think, Kasamani, his Solana bull case is that, we're building towards a decentralized NASDAQ. And maybe, right, with, the Unichain, I mean, this is the white paper. We're not going to read through the white paper, but I think it's like sub-second block times. It's supposed to be very, very fast. And one thing, or one question I had for you guys.
We're like 250 millisecond block times is what Unichain is proposing in the white paper here.
Right. And like, one question for you is, so Unichain is going to be a general purpose rollup. So that's going to allow other developers to, build applications. And also that means that, some liquidity has to migrate from mainnet and maybe other L2s to Unichain. So do you think they're going to have issues migrating liquidity over? How are they going to incentivize that? Is this going to be like Paradigm and like VCs?
Yeah, I mean, I don't have any explicit knowledge, but I've certainly heard rumors of like some, large VCs are ones who are like LPing in certain Uniswap pools, despite, not being profitable as an LP. Maybe some, I'm sure some players will do it. We've got a pretty well-established playbook in terms of incentivizing liquidity migration. And so I would assume the Uniswap Foundation and Uni governance will find a way to provide some incentives to get liquidity migrated over there. But ultimately, this should be a better trading experience for users relative to other places where versions of the Uniswap protocol are deployed. And so it should happen over time anyway, and you just want to make it happen as quickly as possible to kind of get out ahead of competitors. It was super cool also seeing Antonio announced he's coming back to DYDX today.
Okay.
Caught that news. And so it's like, I'm sure it wasn't directly related, like clearly from his blog post, like this was something that he's announcing today, but like he'd been thinking about it, been in the works for some time. So I think that's great. Like this is a DeFi renaissance. We're seeing founders come in there, continuing to innovate and push forward. It's gonna be great competition. Like I love seeing these real mission-driven founders staying at it and coming back and being at it. The real competition is with centralized exchanges, and ultimately the real competition is with traditional finance and all these like archaic financial systems, and can we replace them with better, more efficient, more decentralized, more transparent systems?
Right.
So yeah, but to your question, yes, the liquidity migration is not fully painless. Like there are mechanisms to get it there, get it happening, but liquidity is migrating away from ETH1 anyway, right? Like this is the whole L2 centric roadmap, everything, even beyond the Ethereum ecosystem, right? Like we are not going to be living in a world where all of the liquidity is on, or the majority of liquidity even is on a single chain. And so all of the solutions getting built need to understand that and look at it on different time horizons depending on who you're building for and when and what your assumptions are. But there's going to be like the super chain piece, right, where we're talking about like allowing for this atomic bridging, or at least better connectivity between chains within the super chain. I think that makes sense. But even then, I don't know that the majority of liquidity and activity will all be within the super chain. And so there are going to be a lot of applications that are going to be thinking about bridging beyond that. Maybe you'll have I'm sure you will have advantages to being in the super chain and going within chains there. And, certainly optimism is very highly focused and incentivized to make sure that being part of the super chain has real strong benefits. But there's nobody out there today that is saying like, I'm only using applications on this one chain. If an application lives on another chain, I will never use that application. Like, if people want to use the application, like, they want to use the application.
Yeah. And we'll talk about, I guess, the implications on the Uni token and ETH as well. But before we get into that conversation, I do think we have to talk about, what this actually means for like Uniswap and like the project and the chain. And
Before we
so
get it out, it's just quick, not financial advice, like certainly not like recommending any investments or anything like that.
Yeah. I'm an ape,
You
so
may be.
I own big bags of Uni, full disclosure, but I've been talking about Uni for like roughly a month. So full disclosure, I'm very excited. I'm very pumped.
Well, you did a great job, I think, calling explicitly on the basis of this thesis, calling for a long on Uni. And I mean, I sit in a seat where, we do have folks who do some trading, but I explicitly recognize I'm a terrible trader. I try to look at long-term trends, and that's why I like investing on multi-year horizons, but I don't know how to pick prices and call targets on liquid tokens.
Yeah. They say a broken mid curve is right twice a year, and this is one of those times. But I do want to look at this tweet because when I was researching Uni like swap for like the past couple of months, I stumbled upon this, and then I think Hayden has been kind of hinting at Unichain for a very long time, and he said no user should ever have to hear the term gas fee. And I think Anatoly or Kasamani also said this, where applications or chains should capture MEV and give it back to its users so that people don't have to pay gas fees. Like when you said Unichain confirmed here, did you think that it meant Unichain will, like, whatever MEV that they accrue, they'll give back to its user and subsidize swap fees and gas fees for them? Is that kind of what you meant?
I mean, to be honest, I think that there was a possibility. I don't know. There's a lot of ways to do it, and actually, I've become, I would say, increasingly convinced there's a lot of the benefits that I was initially writing about in terms of app chains that you can get through things like, not loving the acronym, but application specific sequencing, or what is it? Application controlled execution was, I think, the term Kaido was using.
So I'll pull it up here.
ACE is definitely better than ASS as a.
What's wrong with ASS?
You're not an ASS guy. I don't think we want to be trying to have like serious conversations with that acronym flying around. It's gonna the juvenile humor is fun, but probably not what we need as an industry.
Well, aside from the acronym, let's talk about the idea that they put out here. So I think this was an emergent method to build apps that control their own ordering, internalize their MEV, and then redistribute it in an opinionated way. So maybe subsidizing certain types of actions. Did you want to? Honestly, I'm not like that familiar with
so actually this is something. This is I'm certainly wrong on a lot of things, but I think this is something else that I called in 2020 actually. So even earlier. As far as I'm aware, myself and my good friend Austin, we did a proposal at an early Flashbots roast for what we called, what do we call it? Kind of like Highlander tokens. There can be only one, and the idea was to have, and at the time it was an NFT, but I think you can absolutely do this with fungible tokens too. And it was the idea of giving rights around liquidations in lending protocols, and basically saying the holder of like a single NFT for say like Aave or Compound would have like an exclusive period or an advantage in terms of calling liquidations. And then we've now seen UMA kind of come forward now with, I think Oval, and some other teams doing this as well, in terms of saying like, hey, we're actually going to create a possible up to like 3-block delay during which it allows you to capture like MEV. And there's now been teams, including Sorella Labs, that Nascent is invested in, along with Paradigm and some others, that is doing application controlled execution, ACE, doing that like around like kind of dexes. There's another number of other teams who are exploring this as well, but I think there are a lot of the advantages from the MEV specific perspective that you can actually do as an application on a generalized or monolithic chain. The piece that it doesn't necessarily get at is just overall transaction fees for execution on that chain. So you can address the MEV. You can't really control the transaction fees. The Solana approach, maybe it's either genius or stupid. I haven't decided which yet still.
Or both?
Maybe both. Like, who knows? It's both a left and right curve in terms of like, pricing resources on like a, for specific contracts rather than chain wide, having like kind of contract specific, essentially priority markets. I think like that is a form of this, and is at least very interesting. Whether it's ultimately the right solution, I don't know, but the app chain approach ultimately is about control over those execution costs and over the MEV. Maybe the execution costs, if it is possible to really just scale to absurd levels in a generalized way and keep like fractions of a cent execution costs for everybody at all times, like, okay, maybe you don't need an app chain at that point. But I also think that it's just a matter of time if you have transactions that cheap where somebody's going to find some stupid way to use up all the resources on the chain. Like they'll incentivize something akin to proof of work in terms of like transaction spam across the chain, and people will ape into it and do stupid things, and it will degrade performance for everybody. And so I do think, like even Unichain, right? This is not an app chain in the sense that only this application is there. Or I think the proposal I had was around like you permission deployments of other applications on the chain via governance. Osmosis used this approach as well. A number of the chains have gone that direction in the Cosmos ecosystem. So, but I think ultimately that's the way you're going to have to go, is have some amount of permissioning in terms of how your resources get used, or someone's going to come up with a dumber use for the resources that you want to keep cheap for your users of your high value application.
Right. Yeah, I can definitely see, blue chips like Aave deploying, right?
Yep.
Maybe allow for some humble leverage. Maybe some more degen applications go live on Unichain where it allows for like 10x leverage on like random meme coins. Maybe there's going to be like a pump fund equivalent at launch. So I could definitely see a bunch of speculative activity go on there. But I guess we won't know until November. I think they said that Unichain is going to go live. So I
Yeah.
guess we'll have to wait and see.
Yeah. Well, do they even say like for me? I think that was like for like their test net, right? Like Unichain experimental or something like that was what they were talking about
Yeah,
first, and then
yeah.
liquid mainnet.
Yeah. By the way, like Dan and I, like we're still figuring this out live, right? So
We
yeah.
probably are saying some things that are just absolutely factually inaccurate.
I know.
Basically,
So cut us some
just
slack.
absorbing.
It's
Yeah.
11:30 a.m. I woke up to this and I was like, oh my god, I have to get Dan on. But
Yeah, I'm at a permissionless, so it's 9:30 a.m. But yeah, I'm sure we're getting some stuff wrong here. It'll be
yeah,
interesting to see.
yeah. But I think let's pivot the conversation to something that I think everyone is thinking about, also including myself, and it's around value capture. So to my understanding, they're not going to charge LPs fees, which I think is a good thing. Maybe they'll introduce that in the future because back in February of this year they had that proposal. But I think going back to the white paper website, actually here, sharing this screen and pulling it up. So as part of the white paper, you'll be able to stake Uni on mainnet to get some rewards. So blockchain fees are collected and a reward per staked token value is calculated. And then participants can also stake and vote for a validator. And then, you can earn some fees and whatnot. So do you think this is like the best version of a fee switch? And how much fees do you think you can reasonably expect for Uni stakers?
So I think this is a better version of a fee switch than the fee switch we've seen for Uniswap as a protocol deployed on other chains, right? Because and I want to credit, I think it was Cyrus Unesi who actually, no, it wasn't Cyrus who convinced me. Cyrus convinced me of some other stuff. He's very smart. But it was actually Theo Leibowitz, who used to be at Uniswap, who helped me understand that the spread, the fee is just a spread, right? The LP fees are not fees. You can't really comp them to fees on traditional exchanges. A lot of people do, and it shows up in a lot of like analytics charts, but it's not, because it's not being paid to a third party. It's just the LP taking it and like doing this like weird thing where they're like shoving it off into this like fee accrual piece of the contract. But and it's been this way since like day one, where they talk about it, they literally have called it a fee in the initial kind of like Uniswap white paper and proposal, but it's not. It's a spread because it's just saying like no one's going to make the trade, and if they're you got to pay attention to the fee. So this is your all-in cost, but there's not some third party coming in and taking a piece of that. If you flip the fee switch in the current way that the Uniswap protocols are designed, well, then you've got a fee. The piece the protocol is taking is actually a fee. The LP fees are not a fee. They're just enforcing a spread. So I think that, yeah, you don't want to introduce fees on the swaps, because that effectively is going to result in widening the spread more. The ability to capture MEV and return that to uni holders, I think, is absolutely the right approach, the better approach. Some of it actually reminds me, almost going back to the kind of like 0x token design back in the day, in terms of having like 0x relayers and the ability to like, you know, delegate to somebody, but like caring about who you delegate to. It here, it sounds like you don't necessarily really care about who you're delegating to, and that like the nodes or whoever you're staking to are not like also playing some important like kind of like market making role. They're just like kind of proof of stake nodes on other chains, in terms of like there's rules, they're following the rules. They're not necessarily competing with each other in terms of like faster, better execution to make more money. They just like want to not screw up and get slashed or lose things. So yeah, I think this it seems like a very reasonable thing to do. The piece that I don't fully understand yet is like, it sounds like, is your read also that like this model is going after the MEV and redistributing the MEV, but it's not addressing like additional transaction fees? Like, it sounds like to me, transaction fees, to the extent they exist, like they're still being paid in ETH, right? There is
Yeah.
still ETH being like essentially that's needed to then go and like, you know, post the blob on Ethereum L1. So that's still something for ETH holders, right? But I would say like even ETH holders already, with the whole kind of like PBS stack, a lot of that MEV is not just like going to ETH holders. Some of it is, but like a lot of it's being captured by other parties and being returned to users in various ways, even on ETH L1 now. So I don't think this is stealing a ton of MEV from Ethereum mainnet. Certainly still taking some transaction fees away, but like that's the L2 centric roadmap, right? That's all L2s are doing, this moving execution there, but like ultimately allowing growth to happen, because if people don't migrate to Ethereum based L2s, they're going to migrate to Solana or some other ecosystem where they can get cheap transactions.
Yeah. Like when I saw this white paper or this idea of staking uni to capture some sequencer fees and whatnot, my immediate thought was that maybe this is incrementally bearish ETH if you just view it from like a cash flow basis. But maybe, I mean, that's not the whole point of the roll-up centric roadmap is that ETH is money, and we're going to export money to all these L2s that gets used, and then as if more people adopt it as money, then ETH is going to have value. Let's say. What do you think about the relationship between Unichain and ETH? Like, do you agree with me in that this is like bullish uni token potentially, but kind of bearish ETH because of the loss of some like of the transaction fees and the MEV that the network captures?
Um, I don't think it changes my long-term thesis on ETH. I think it's really hard to value any token in crypto on the basis of doing like a P multiple and expected future cash flows and all this stuff. It's like it's really hard. You're pricing in
Hmm.
a lot of assumed growth on basically everything. Um, in terms of the Uni token, I mean, I think it's hard to say on this specific mechanism. Again, I don't think this is the final form that Unichain will take, or the final form of value capture we're likely to see for the Uni token. But I think it is very bullish in the sense that both Uniswap Labs and Uniswap Foundation and other ecosystem players are really pushing forward, right? They're not sitting back. They're not saying like, oh, we're just going to like capture fees through the front end and do more marketing and like build more like mobile apps and stuff like that. Like, no, like they're getting down and they're like pushing innovation forward. They're open sourcing stuff. They're working with Flashbots. They're working with Optimism. They're working with folks to really improve infrastructure in the ecosystem for everybody. And as long as like they're hungry and they're pushing things forward, like that to me is a far more bullish signal than like whatever spreadsheet you want to put together in terms of like likely value that can flow to uni token holders with a uni chain. Like it's
Got it. Got it.
everybody should be looking at this over. I mean, look, or some for short-term traders, like sure, I can absolutely see bullish interpretations of this, but like on a longer horizon, I think the signal of continued innovation is much more important than the specific mechanism that we're seeing introduced here.
Yeah, I think. I mean, putting like my trader slash investor hat on, um, I've been like pretty bullish DeFi tokens recently, and it's because I think everyone just thinks that they're worthless governance tokens, and they have been historically, but it doesn't mean that it's gonna be worthless forever. And now with Aave, turning on fee switch maybe later this quarter, Maker did it last year with buybacks, and now maybe Uni there's like some value pool there. Now the market has to change their mindset around DeFi tokens, and they're no longer worthless. They're worth something, and then it could create more inflow. So like that's why I've been calling for a DeFi renaissance. But I'm not going to show my bags too much. I do want to touch on this post. Let me pull it up here around the fat protocol thesis versus the fat app thesis. So the fat protocol thesis, I think, was created by or championed by Union Square Ventures in 2016, I think, where the majority of the value is going to be captured by the chain because all the apps are going to build on the chain and then it trickles down. But now we're starting to see people saying, like maybe the fat protocol thesis.
I think the fat protocol, wasn't that Bernisky? I think.
Yeah, it was like Bernisky, but I think it was the original post was like from USB.
Okay.
Like yeah. But like now there's like maybe people. I think Anatoly said this too, where he wants the applications on Solana to be worth more than the chain itself.
Yep.
Yeah. So what like do you think this is like we're starting to see a paradigm shift from all the value accruing to chains to apps, or do you think it's still too early to say? If you have any thoughts there.
I don't think it's either or. I think it's great that people are focusing this way. There was actually a period of time. Now the old man who's been around the ecosystem for a while, but I remember debate. There was before Polymarket, there was a prediction market protocol called Augur that was like everyone was super excited about back in the day, and then there were teams that were building on top there. I forget the name of the team, but there was some team that was actually like driving through their interface. I think it was the majority of volume on Augur. And some of the conversation was like, oh, is this actually like, Ben Thompson from Stratechery is like,
aggregation
theory. Like, is that going to play out here? Where like, as the application, you own the relationship with the end users and you can actually like commoditize the lower layers of the stack, either fork and run your own or aggregate multiple protocols and sources, and like, but you're ultimately the one because you've got the relationship with the demand side. that is the powerful position to sit in. And I think we're going to start to see more people talking about that now. I think we've already been trending in that direction with more teams realizing they can throw fees on their front end and be able to do that. There's been some proposal. I think A16Z had a proposal around ways that you can do that and like do different regulatory compliance things related to the token and services in different jurisdictions, which, oh man, that like, makes my head hurt thinking about that. But I do think, look at, Coinbase, who I remember, 8 years ago or so, like looking, being like, God, like how extractive. They're still charging like, 1% fees on buys and sells, like plus a spread in there. Like, oh my God, this can't persist. It's persisted, man. Like this has gone on way, way longer. And people are willing to pay for having a really smooth and easy user experience. And especially in crypto, right? Like you've been doing this for a little while now too. And like you can see that when we've been crypto for some time, you start measuring returns in multiples rather than percentages, right? Like that's how people talk about
Yeah.
return on their bags in crypto. And that just like breaks your brain relative to other markets and investing. You also see severe downsides to this as well. Like it's not just all up, but you know, because of that, people are willing to tolerate, I think, more meaningful fees in some cases for certain usages. And I think overall, it's important to have a super low cost, like underlying infrastructure and chains and protocols, but then so people can go and get close to the metal, so to speak, with that infrastructure if they want to. But I think if you're providing best in class experiences on top of that, like there's a lot of room to charge for doing so. And I think we're seeing more teams realize that, and that will become more of a trend. I don't
Yeah.
necessarily think it means no value capture on the protocol level. Like we're investing in a lot of protocols. We do still think that they're going to capture value, but there's going to be a lot of ways to capture value at multiple levels of the stack. It's not all or nothing.
Yeah. I think there's some positive externalities that could come out of, maybe the fat app thesis gaining more mind share, because I think, in the past 2 years, people would just invest in like an L2 or a chain. Oh, it's like a chain. It's like a 200 million FDVR. Like, fuck it. Like, I'm going to punt here, right? Because everyone just thinks, oh, chains are going to be worth billions. And, oh, it's like this app, the dev is good, but it's an app. I'm not going to buy, right? So maybe there's going to be more attention that goes towards like app developers. And going back to aggregation theory, I did a podcast with Arthur 0x, I think a month or two ago. And he mentioned that it's interesting because on EVM chains like ETH and L2s, aggregators like 1inch, like the token's like worthless, or so the market says it's worthless. Whereas for a monolithic chain like Solana, Jupiter has all the value because Jupiter has all the users, and perhaps Uniswap technically has all the users, right? Because a bunch of people go through the front end fees. So maybe aggregation theory is also like working in Ethereum land, and maybe. I saw this question with Hugo here. Is this really a good idea? It's going to fragment liquidity even more. Like, do you think there's like, what do you think the risks are for Uniswap to do this? Is there a chance that like no one just uses Unichain and then like nothing ever happens, or do you think that you're just like betting on the execution ability of?
I think they have to. They have to take the swing, right? You can't if they don't. Others will. It's pulling. People are already pulling liquidity to other chains. And they've already been deployed on other chains, right? Like they're making a big push on base, and a lot of the people that I work with, founders that I talk to, I don't know any of them that are expecting to do like a lot of trading volume that are like, oh yeah, like let's go deploy on ETH1. Like everyone, like base is actually the one that's been getting the most attention. And so I think this is another interesting place for teams to consider going and deploying their liquidity. I think Your question about like perp markets, I think is super interesting. I mean, I can't tell you the number of pitches I get for perp dexes and as app chains or on fast low cost chains and stuff too. There's a ton. It's a massive prize to be won. I think, like centralized exchanges, there won't just be one winner. There will be multiple very valuable companies and protocols built in this category. One of the teams that we backed a while ago, and is getting very close to launch soon, is Infinity Pools, which creates essentially a perp like instruments that is built on top of spot DEX like Uniswap style liquidity pools. And so you can do this kind of like perp type trading with crazy amounts of leverage, no oracles, no liquidations, that becomes possible using, like, built on top of this XYK AMM approach. And so
Yeah.
I think that is going to be an extremely interesting thing to see getting built here and going live. We've seen other teams do versions of this. So yeah, I think there's a lot of room for innovation. You got to do it on your own chain, take that swing, and see what else can blossom around it.
Do you think so? One observation I made is that there's like some speculative activity on base, right? Because that's where the degens are. But the majority of the degens are on Solana, right? And they're like just punting meme coins. Like, do you think this could potentially bring back degen season on EVM? Because if Uniswap it or Unichain
Maybe.
is a general,
I don't know.
right?
I think it's possible. I think there's a strong brand. I don't know what percentage of Solana degens get then like pulled over to Unichain. I think there's like more like reactivating latent degens with
Yeah, all the ETH bag holders.
Yeah, it's like maybe that's more the what happens here, or pulling new people in. Right? I think the Uniswap brand is incredibly powerful and valuable, and so like their ability to get attention and to reach users and to pull people in, you've got a lot of trust that's been built up in them over many years at this point. And so when they're able to offer a competitive experience to what people are seeing in Solana, and hopefully not one where you're not having to press like 5, 6, 7 times to actually get a transaction to go through, like then I think, yeah, they can get a lot of people excited for what, in the best case, when it's like working well, it is so slick. Like when you use Solana and it working and working well, like it is so much better than certainly Ethereum L1, but even compared to a lot of L2s when it works. And I think that if we can get that, kind of reliability that people have come to expect with just like go to Uniswap and it just kind of works, then absolutely, I think that this could be a very compelling experience. And I know there's a lot of people who are, bulled up on Ethereum ecosystem DeFi and are kind of like looking for something that feels new and exciting to kick things off. Maybe this is it. I'm hopeful.
Yeah, the ETH bulls. I do another podcast called Steady Lads, and it feels like every week is like ETH holder therapy session. It's like, oh yeah, ETH BTC is down again. It's been 2 years. What's gonna bring it back? And maybe who knows? Like maybe we're just, or I'm not gonna say maybe I'm coping as ETH holder.
Yeah, maybe we're all coping. I think I tell a friend, it's like, it's like this feels like a sentiment low. It's like the lowest yet.
We've been saying that for 2 years.
Lowest so far. Yeah. It's like, hopefully this is
Yeah.
not like, Atom where it's like, always finding new lows and price and sentiment. But like,
Someone said this too. This is like,
we'll see. Yeah,
like
yeah.
the value
Perfect
apps.
timing on this.
ETH will
Yeah.
become Atom.
I mean, I think there's a lot of what Atom did that was like right, obviously, in terms of like thinking about these like application specific chains. I think the way things were like kind of like brought to market, so much drama. Like that is a crazy, crazy decentralized ecosystem over in Solana. Like we think there's a lot of like infighting and drama in like kind of Ethereum protocol development land. Man, just go check out Cosmos. That's crazy over there. But yeah, I think Cosmos had some big picture things right, and maybe some execution things and sequencing things less right. But it's a long game. I still I'm very excited about some teams in the Cosmos ecosystem. We're investors in some teams like Osmosis and Informal Systems, and we do see some like really cool stuff. Union, we do see some like really cool stuff happening over there. But I think it's also the best builders, I think, in the Cosmos ecosystem are realizing that there is a lot of alignment with the long-term vision in the Ethereum ecosystem. And it kind of doesn't matter, who had the idea first or anything like that. When you realize you've got this shared vision, okay, cool, let's find ways to work together to bring things closer together. And I think that's happening. So I'm especially bullish on like people who understand the Cosmos vision, but also have like practicality and understand that a lot of the activity and liquidity is happening in EVM lands, and like finding ways to use both together.
Yeah. And yes, Jay, we're doing this live.
Very, very live.
We're so super bullish. So no, Waj, a friend of the channel. So I'm just curious, like, what do you think of this multi-chain future, right? Because there's so many L2s, liquidity fragmented everywhere. People are pissed. Do you think it's going to be this scenario where maybe the central liquidity for all these L2s or all these super chains is on Unichain, and then people like just swap in like back and forth, or do you like? Are you still bullish on the multi-chain future? And like, what do you think it'll look like? And do you think how will Unichain play a role in that?
Yeah, I don't know. I mean, I think for all of this, I think of it as like, what are possible outcomes and how likely are they? I mean, I think I'm highly convinced we're not going to live with like a single monolithic chain like being the majority of activity that we're seeing like on blockchains and in crypto. I think within the super chain, I agree that we shouldn't have like roughly like within an order of magnitude kind of like similar size pools across all these chains. Like that just doesn't make sense. It's inefficient. Maybe there's some small amount of base liquidity that's just like you can get some cost savings, some efficiency, and just like allowing certain small swaps to go through just on that chain. But I also think that chains and liquidity pools and all this are going to follow power laws. And so there will be, one or a small handful of kind of largest chains and liquidity pools within the super chain. And if the super chain folks are able to reach their goals in terms of making interoperability in the super chain be really fast and cheap, then there ceases to be any incentive or need to go and bootstrap that liquidity for that like ETH USDC pool on your own chain. The chain, either there are one or a small handful of kind of like dominant DEX LP chains that like most liquidity happens, or you're going to want to see assets have their dominant largest liquidity pool on their native chain to like reduce the amount of bridge risk associated for like assets kind of sitting there. And I think that for the exciting, I think, bullish thing in terms of like how I think about ETH as an asset, like operating, is that if you want something that is not a stable coin with all the trade-offs that you have to make around stable coins and anything US dollar denominated, ETH is the largest and most obvious asset to pair with. And to the extent that you're doing any kind of like passive LPing, you're going to have a lot less divergence loss if you're LPing against something that's like a somewhat correlated asset in terms of something like ETH versus USD, which is obviously not correlated
Yeah.
in a meaningful way to any of these other assets.
Yeah. And by the way, for people that's actually watching this live, thank you for being here. Feel free to ask questions because I'm almost running out of topics. So I would appreciate any questions. And since I'm running out of out of topics, I have this very left curve question for you. So I'm all I've been talking about this on my channel, but one of the reasons I'm really bullish is because Hayden is balding. Like, did what do you think about this
Hayden's been
regime?
balding for a long time. I mean, like, it's not, I don't know, that old photo even too. It's like that hairline's pretty high. But no, I
is
think,
it bullish?
yeah, I mean, I'm not going to counter trade bald for sure. Like,
Yeah.
yeah, bald founders have a great track record. Hopefully my team doesn't get on me to start like shaving my head to to juice our returns.
Okay. Sorry, I felt like I had to include that.
You got it. It's great.
The balding thesis.
Yeah, I
Yeah.
mean, yeah, I think Brian Armstrong's wedding, and like everyone's like looking for the dog. Everyone's looking for the meme, for the next meme and like thing to hook onto. But it's all in good fun. But I mean, I think the bigger thing that I think is exciting here that we haven't talked about as much is really the amount of kind of collaboration that is going into this, right? This is not just they partnered with Optimism, which, like, by the way, like that, I don't know. I don't think I included in the post, but like that from the time I wrote that initial post, like the bet was it's going to be like an Optimism, like an OP stack, like application specific roll up. I think Carl Flores, one of the founders of Optimism, and Hayden were like college roommates. He was the one who like kind of got Hayden into crypto. So like this was the likely effort to happen. But then it wasn't just these two teams working together, right? You're seeing, especially like there's a number of Flashbots folks who are on this white paper. And I know they've been working very deeply on the TEE stuff and various ways of doing kind of fair sequencing and potentially adding some like privacy guarantees in the future. I think those are some of the exciting ways that this can expand and grow. And just seeing the collaboration here, we'll see who else comes in and builds on top. The Hook ecosystem is going to be, I can't say off the hook, but okay. Like it's going to be crazy. So I'm excited about the collaboration that will happen here. And so, yes, this is another chain where stuff is happening. But I think by being that kind of like beacon of like, hey, we're pushing the envelope, we're trying something new, we've got this established brand behind us, that's going to be very exciting. And I think it'll be interesting to see how, I would say maybe less users initially, more builders, because I think users ultimately will go to where the best, most compelling applications and experiences are created. But like, how do builders start to think about Unichain versus Base? Because
right.
I talk to a lot of founders, like it's like, okay, being like EVM centric, or at least EVM first in terms of like how we're going to roll this out, makes a lot of sense to them. Base has been the obvious chain that I've been encouraging founders to go build with. Like, you choose an L2, like you want it to be like fast and low cost. Like, why are you going to choose anything other than Base when you've got Coinbase with massive amounts of incentive for themselves
distribution.
to like make it easy? The distribution is just so much better there. So like, of course you're doing that. Uniswap also has great distribution, and they're both part of the super chain. And so this is going to be really interesting in that they're, I think, in some ways like very much competing, but then they're also collaborating, and that they're both contributing open source code and trying to be interoperable with each other and with other chains within the super chain. It's going to be fascinating to see how this plays out, where the kind of collaboration and competition breaks down, and what builders ultimately choose, what their decision criteria is going to be. I mean, if I were a team that was looking to come to market in kind of Q1 25, I'd be like, I'd be thinking really hard right now. Like, is it base?
Yeah.
Is it Unichain? And not for the reason. I mean, there is some like kind of first mover advantage too, of like being live early when a chain goes live, and like being the first to do whatever in like your category. But I think just like what are the decisions people are going to make? The 250 millisecond block time is super exciting. The fact that they're going to be using TEEs in some capacity and kind of pushing the envelope there with Flashbots. I'd be surprised if Flashbots isn't also either currently collaborating or looking to collaborate with Base and others in some way. Will Base take this kind of sequencing approach too? Like, does it make sense for
Yeah.
them? And these are both US based companies that are fighting with the SEC, and are some of the approaches here, are they going to converge on similar views in terms of what they can do and what is best, both from a kind of like business standpoint, from a user experience standpoint, and from a kind of like regulatory positioning standpoint? It's going to be fascinating to see them
Yeah.
lean
And
into what their relative strengths are here, and differentiation, where they converge and where they diverge.
yeah. And while you were talking about, base versus Unichain, maybe it's like some friendly competition, but one thing I was thinking of is, yeah, like if I'm a dev, then, or, if I'm helping a DeFi protocol, I would just say, hey, just go on base. But now it's like, okay, like maybe Unichain makes sense. And the advantage that Unichain has is that I think the Uni treasury has like 30 to 40% of the token. So they can just incentivize builders to come build. And that's something that base doesn't have, at least not yet. So maybe
Yeah.
if Unichain vampire, I mean, not like if like kind of vampire tax users, TVL devs, then maybe it kind of forces the hand for base to maybe drop a token, right? I mean, you think about like
Oh
Uniswap
yeah.
had
I mean,
all the
I
TVL, SushiSwap,
absolutely there
etc.
will be a base token at some point. There's that to me feels completely inevitable. And I'm sure they want to do it, and just like the lawyers telling them whether they can or can't at this point.
Yeah,
But yeah, I think it's also an interesting question for builders, though. It's like, hey, I think Uniswap Foundation has, in some ways, like been, or not the foundation actually. It's like the uni governance, right, has been a bit stingy in term relative to other projects in terms of willingness to give out token incentives for activity and for use of the protocol. I think it's also a huge sign of strength that they haven't needed to do that, and they've got as much activity as they do, even like with pretty minimal incentives on that front. But the question is like, are they going to take a kind of like heavier touch with incentives to kind of get the chain going? That would be interesting to see. Or if they keep it like very light on incentives, how do you weight the incentives, small explicit incentives via uni token versus like, do you believe there's a high likelihood of a base token in the next 1 to 2 years? Do you believe they're going to want to heavily distribute in some kind of retroactive way to users and builders in that ecosystem? Like, we've certainly seen like the kind of industrialization of kind of like airdrop farming and stuff, and like people really start to price this in. I'm sure there must be some markets on
yeah.
this already, in terms of like, will there be a base token, or will it happen by a certain date? Like, I think we'll start to get some indication from those markets as to how likely that is to be, and then you can start pricing it in, right? And I think if base were to have a token, all the traders, I'm sure, would start like comping it to uni. And in some ways, I think I know nothing about, about this stuff, but I would like, I'm sure
Yeah,
the
we're just speculating
more
here.
liquid guys, the more liquid guys on the team would be like, no, Dan, this is stupid. major left curve on this, but like I would assume that like kind of like the uni token price, at least initially, would kind of be like a floor for a base token price. Just in terms of Coinbase being this like international, like US publicly traded company, like already. Maybe I'm wrong. It would be pretty crazy if it came out lower than uni. But like, yeah, that's certainly Uniswap has an advantage now, and they've got a token out there that they can use. But you can also make the case like Coinbase has an advantage in that they haven't yet launched the tokens. They've got this like one big like trump card that they've yet to play.
Right. Yeah. All right. So we just hit an hour. I've been reading the chat, and apparently, Elijah. I don't know who this guy is, but apparently he's played poker with you, and now he's calling you a mid curve. So maybe there's some friendly banter there.
I probably
some friendly banter.
Yep.
It's okay. Like we belong together. This is a mid curve podcast.
Elijah took all my money last time we played poker, so yeah, he's certainly has the right to call me a mid curve.
Yeah. All right. So let's try to wrap it up here. So do you have any final words for Unichain being announced? Are you? If I just will sing them.
I mean,
but are you bullish? Like what? Yeah.
I'm bullish. I'm excited. I think like this was a great move by the various teams kind of in the Uniswap ecosystem. I think it's certainly not a sure thing that it's going to be majorly successful initially or ever, but like I think it probably will be, and I'm excited to see how it evolves. And we'll be looking to get involved. And also, look, if other people are thinking about this, looking at building on Unichain or other things, like please come talk to me, reach out to me at Dan Elitzer on X, on Twitter, on Warpcast, on at Nascent XYZ also. We love talking to people who are building exciting stuff and looking towards the future. And one other area people are looking for like predictions and stuff to look out for, like check out a piece we published about a month ago on web proofs. So kind of ZK TLS, ZK email. I think this is another big trend that we're expecting to start playing out in the next, I would say 6 months or so. I think this is going to be like a major wave. So yeah, check it out. Come talk to us if you're building cool stuff.
Yeah, but talk to him after you talk to me.
Talk to both of us. Talk to both of us.
Talk to me first. Talk to me first. All right. Well, thank you, Dan.
Yeah. Sorry about that. Don't know what that was.
Okay. All right. That's a good cue to end it.
That's a cue to end it. All right.
All right. Thanks, guys. Bye.
Bye.